Hello traders, Gary Wagner here just before 12:30 in Honolulu, 6:30 in New York. It is Tuesday, March 24th, 2020, and this is the daily report for gold and silver. It seems as though the second stage of the gold rocket ignited today, taking gold over $100 to the upside. We are now in aftermarket trading, and it's up an additional $12 at $16.7280. We bought in yesterday at $15.71, so we've got just a little over $100 profit. We've moved our stop up to $15.97, and on today's show, I want to talk about two things. First, our upside targets for where I think our exit strategy could take gold to in a very realistic manner, and secondly, on the members page, you will see a link for an article that is going out to technical analysis of stocks and commodities subscribers. It is a reprint called Gold Super Cycles, because the last part of today's show will visually cover what I'm talking about in the article. Look for the link on the members page. First to the price board. What a day for the financial markets and the precious metals markets. Gold basis April contract trading up over $100 at 101.40. That's the net change at $1,669. A net gain of about 6.5%. If you recall from yesterday, we did enter the market after it closed in New York, right as it began trading in Australia. Traders taking that trade, of course, got in at around 15.71 is where we're marking it. We put a very, very low stop in the market down at 15.01, and that was very brief because as the market went up, it allowed us to actually trail our stops up. Our current stop is at $15.97, so we've already guaranteed that we've locked in a little bit of profits. But on today's show, I'm going to talk to you about our upside targets and what I think is genuinely achievable. Now, even though gold had a stellar performance, a 6.5% gain, it had the smallest percentage gain of all the precious metals. Next in line was silver, $14.40. That's after a $1.14 gain, 8.5% climb. After that came platinum, $711.80, up $84.30, and that's a gain of 13.43%. And finally, palladium gaining just over 17%, a net gain of $267 at 18.24. Lastly, we look at the dollar, and the dollar continues to fall, although it's extremely strong, well above 100. It was down over 1.2%, 123 points at 102.005. Let's take a look at our technical studies. What an amazing gain today, over $100 to the upside plus $60 yesterday. What I want to show you is a playback feature of the 23rd, of course, that was yesterday, and show you how this market climbed literally from just under 1,500 to approximately $1,669. Look at this on each hour. We have seen the market move up. It's now at about 1570, and this is where we actually issued our buy signal, right here at about 1570. The market continued to move up. It corrected a little bit, but as you can see, as we started day number 2, and that's what this arrow represents, we traded sideways. We had a small correction from the upside move that we saw, but the best is still in store, because during the day we made a play for $1,700 per ounce. That is this area right here, when we had the high of $1,698 per ounce. This is settlement here, up 101. So in terms of my upside targets, we've hit a couple of benchmarks that I was looking to hit. Although I thought it would take maybe a week to hit them, we did them in a day. I am definitely happy about that. But we can see two separate occasions here, as well as here, in which the market challenged $1,700 per ounce and actually effectively hit that on the last move in terms of an intraday high. However, we have never had a closing high above 1700 for many, many years. We came very close yesterday to once again challenging it because we hit that high of 1698. So in terms of targets, my short-term target is to trade above 1700 on a closing basis. At that point, we will probably look to move our stops up roughly to the 1644 area. We did get a question from one of our viewers asking if 1650 makes sense as a new line of support. And you could effectively say that because it's just above this number. And when we do that, we see a big area of congestion, which acted as an area of support. And then, of course, when it broke, it acted as resistance. Now that we're back above this area, I think 1644 to 1650 is going to be the next real solid area of support. But as I said, my next target is a closing above 1700. It is currently 12:03 in Honolulu, 6:03 in New York, and the morning in Australia. We have just seen the market open back up, and what we are looking at is another rise of about $15. We're currently at $16.75. If you look at the chart on the screen, each candlestick represents 2 weeks in time. I needed to use that time length to show you the different targets that we're looking for. As I said, the first target is an effective close about $25 from here above 1700. Now, if in fact it does hit that, the next major target has to be these series of double tops that come in roughly at 1800. If you recall, as the market ran up during quantitative easing during the crisis around 2011, the middle of 2011, we peaked at 1900 plus. The market oscillated between approximately 1537, if I'm correct, was these lows, and then we had a series of tops at 1800. So an effective break above 1700 really gives us clear sailing, possibly as high as $1,800 per ounce. And lastly, I want you to see my very, very long-term view. To get this view, I'm using Elliott waves, but I'm also using a super cycle count that contains candlesticks of 2 months in length. What that shows us is that we are still within the fifth wave. The fifth wave officially began when we hit these lows right here at about 1040, and that was back at the end of 2015, the beginning of 2016. We have had a slow and methodical rise to the upside. As I said, we're getting close to 1700, but our upside target takes us as high as about 2050 to $2,100 per ounce. Now that is not short term. I'm looking at that throughout the year, but nonetheless, it is a great brass ring to shoot for. This has been Gary Wagner, wishing you as always good trading. Maintain your current long position and your stop. We will effectively send out a trade alert when we feel it is time to tighten that up a bit. Have a great day. Bye-bye.